you've seen like monetarily what silver trades for has certainly been down to 12. So if you could imagine a ratio of 12 or 10, silver would have to be over $200 an ounce. And when you see the precious metal cycles, you'll see big dislocations in both directions. Just a couple of years ago, the ratio was about 125. When silver was last at $50, I think it had gotten down to under 30 or thereabouts. And it gets as low as 14 as well. You see these big swings in both directions. And we haven't seen that yet. Gold is hit new highs. It's just trying to top out and break it out again. And silver is nowhere near that yet, but now it's made its first move. And so $50 could just be the next stop. The next high or on silver could be much, much higher than that even.
The gold to silver ratio recently hit around 125, but when silver last peaked at $50, the ratio was closer to 30 and can drop as low as 14. Gold is nearing new highs, while silver lags but has started moving up. Silver could surpass that significantly if it revisits its previous $50 high. Considering historical lows when silver traded around $12, a scenario where the ratio drops to 10 or 12 could imply silver prices exceeding $200 per ounce. Speaker Jim McDonald, known for providing insights on macroeconomic trends, market outlooks, and portfolio strategies, explains that precious metals follow cycles. Despite recent currency expansion, gold has maintained or increased its purchasing power over the past 20 years. In 2021, silver breaking $30 signaled a potential rise to $50, marking a new bull market. The gold to silver ratio, a key metric, has averaged around 54 over the past 50 years. Meanwhile, silver plays a crucial role in solar panels, which are the most significant industrial use. Due to its superior conductivity, it's also essential in electronics, found in devices like phones, laptops, and tablets. Additionally, silver is gaining traction in the medical field for its antibacterial properties, especially in nanoparticle form, which can effectively destroy bacteria. Before penicillin, silver was widely used as an antibiotic. Jim McDonald highlights silver's industrial solid demand, especially in green energy, solar panels, electronics, and medical uses, which makes it unique. This demand creates supply pressure, and when monetary demand rises, silver prices can surge, often outperforming gold. Its volatility compared to gold is mainly due to its significant industrial role. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
It's part of the cycle, the natural cycle, precious metals. And it's amazing how the precious metals have really maintained their purchasing power, especially over the last 20 years. I mean, historically, that's what it does. But it's actually increased with the amount of fiat currency that's been created, particularly in the last 4 or 5 years. And what an ounce of gold would buy 20 years ago or 25 years ago, it's actually buying a little bit more in goods and services now. But back in 21, when I said that when we break 30, we're going to see 50, that's part of the cycle of a silver bull market that I believe that we've just entered. And there's all kinds of metrics people look at, and one of them is the gold to silver ratio. And so I just recently read an analysis by someone over the last approximately 50 years, the average is about 54, that ratio, being supported by different governments around the world. Big push there for this clean energy. And so silver is a key component in solar panels. So that's probably the single biggest consumption industrially of silver. The next will be in electronics. It's an extremely good conductor, silver, and is used in all kinds of electronics from cell phones to iPads, laptops, etc. So, and then one interesting area that's seen a lot of growth, although not on the scale of solar, certainly is the medical industry, because interestingly, silver is an antibacterial agent. And when delivered in nanoparticle size, so very, very small particle size, it destroys every single bacteria known to man. It will hit the cell wall and dissolve that cell literally. And before the invention of penicillin, it was a pretty big antibiotic used in the medical industry. at least silver has this huge industrial demand to back it up. And that's a very interesting point. And I think that's an even stronger point today than it was then because of the increasing industrial demand you have, particularly in the green energy space, and so with a focus on the solar energy and solar panels and the huge use of silver there, plus a lot of advancements in other areas that silver is expanding into, including the medical industry and like all electronics. So you've got that kind of inelasticity in the supply that gets created because of that huge industrial demand. When the monetary demand kicks in, then you get this real kind of stretch of supply and you get that slingshot and that price of silver where it shoots right past gold and far outperforms it for a time. So you to your point, silver is more volatile than gold in long term, and I believe it's probably because of that big industrial component.
In a recent interview with David Lynn, Jim McDonald points out that over the past 25 years, massive fiat currency injection significantly during COVID has devalued currencies, fueling inflation. Despite this, gold has maintained and even increased its purchasing power. For example, in 2000, gold was $300 an ounce and could buy 15 to 20 barrels of oil. Today, at $2,400 per ounce and oil at $80 per barrel, gold can buy about 30 barrels, showing its purchasing power has risen. In contrast, $300 now buys less than 4 barrels. However, silver is more volatile than gold, so investors must be comfortable with that. Jim McDonald recalls that gold has historically pulled silver along because silver is also a monetary asset, often called the poor man's gold. There was a time when silver competed with gold as a reserve backing for currencies, but gold ultimately prevailed. This lasted until 1971, when Nixon ended the gold standard, opening the door to fiat currency expansion and its subsequent abuse. Now, let's shift our attention toward the interview.
The bottom line is the amount of fiat currency that's been injected into our economy across all nations the last 25 years is incredible. And so that's just devaluing the paper currencies. And especially during COVID, I can't remember what the numbers are exactly, but in the United States, the amount of money that was injected into the system, it dwarfed what was injected into the system during the financial crisis. And it was injected in a lot shorter period of time. So it's not surprising that we had this huge inflation hit us coming out of the back end of COVID. That was inevitable. And in the meanwhile, gold just keeps chugging along, being able to buy the same amount of goods as it could 50 years ago. In fact, more. I I have a receipt of some gold purchased in the year of 2000, and it it was at $300 an ounce, and you could buy at that time almost between 15 and 20 barrels of oil at that time with 1 ounce. So today at 2,400, you can buy about 30 barrels of oil with oil at $80 a barrel. So the purchasing power in that measure is actually gone up. Now, those two commodities can be pretty volatile, but that's the point. What does $300, how many barrels of oil does $300 buy today? Yeah, it will apply, but you've got that extra volatility. So,
Right.
the investor has to be aware of that and comfortable with the extra volatility that silver brings. But gold always drags silver along for some reason, historically looking back, because ultimately it is another monetary asset that's used like gold. It's the poor man's gold. And at one time, it was very competitive with gold as a reserve backing. And when the U.S. dollar was backed, many currencies were backed by gold. In the United States, there was a period of time where there's a lot of argument whether they should be using silver or gold. and gold ultimately was backed the currency until, of course, 1971 when Nixon removed that and
Yes.
opened the door for this what is ended up being abuse of the fiat currency.
Both gold and silver have maintained their value over time, with silver offering higher volatility and potential upside due to its industrial demand. As monetary assets, they continue to serve as hedges against currency devaluation, especially in today's inflationary environment. How do you see the role of precious metals evolving in the current economic landscape? What factors could drive a significant divergence between gold and silver prices? We value your thoughts, so please share them in the comments. If you found this content valuable, please give it a thumbs up and remember to subscribe to stay informed. Thank you for being part of this journey with us.